All right. Hello. Good morning, ladies and gentlemen. It is September 19th, 2023, 8:45 a.m. I will be with you for the next 75 minutes of your life on this lovely and beautiful Tuesday morning. We've got a lot to talk about, ladies and gentlemen. We've got Instacart IPOing today. I actually forgot they were IPOing today. So this morning I woke up, I was like, oh, Instacart's IPOing. So Instacart will be IPOing today. That's going to be interesting. And I have to say, in terms of discussing more around what I think this IPO is going to be like. Second of all, we've got gas prices. Brent oil right now at $93.82. We thought it wouldn't go above 85, then 87, then we're like 90. That's then 92. We're like, all right, it's not going above 92, 93, 82, 95 seems to be the new cap right now. We'll see if it goes above 95 after that. After that, we also have Elon Musk speaking with Israeli Prime Minister Benjamin Netanyahu on a variety of topics. And during that conversation, we're going to play a little bit of Elon talking about how he's going to potentially change Twitter's entire business model, which for 550 million monthly active users would be one of the biggest changes to a social media network that we've ever seen. And if he's successful with it, it might mark a new era for how social media happens. And then we've also got ARC CEO Kathy Wood talking more about self-driving taxis and what's going on in the world of Tesla. So we have a lot to get into today on the market open. Maddie Gersh, Brian C., Sam Chan, Gators, Amit Danger, Guten Morgan. Good morning to you as well. Mr. Seymour Duck, Broccoli Bob, Invisible Voices, Kane, Marvin. Good morning. Good morning to you. Hakoon, Peter, Ty Gordon, Joseph, Viegas, Miami Ren, Midwest, Garcia, Peter, SJ, Dex, Ray, Matt Money. I tried to remember when Amit loved me. Matt, you know I love you. All I do is love you. Sunjay, morning, new time slot and format rocks. Honestly, man, I am loving the 75-minute show. I can't say how much, I genuinely look forward to doing this show and doing the market open because I'm so excited. I wake up nowadays at around 3:45. So I was up at 3:45 today. So I'm ingesting all of this news into my mind for like 4 or 5 hours before we even get into the show. And so I'm just ready to talk and I have a lot of stuff to say and I'm excited to be here. Erwin, Dexter, David, Imnop, Kanki, Delarose, thank you all for being here today. Let's get started. So first thing I want to talk about is Instacart IPO. Now, Instacart has repriced their shares at $31 a share. Right now, Instacart is currently thinking of doing not currently, they're going to be doing this, a $10 billion valuation. Here's a thought that I had this morning. Actually, it's not an original thought, but it's something that when I heard on the news, I really started thinking a little bit more deeply around what this IPO really means. Do you guys remember Postmates? Postmates was a company that was basically like Instacart. It wasn't focused towards groceries, but it was focused towards anything. So Walmart, Target, Walgreens, anything. I used Postmates a lot back during the pandemic. I'm sure all of us got introduced to Uber Eats and Instacart and things of that nature during the pandemic. Postmates got bought out by Uber for $2 billion. And a lot of people forget that this happened, but this did happen. Uber, back in 2020, $2.65 billion all stock transaction. Uber decided to take Postmates off the table. Why did they do this? Because Uber Eats is a beast. Uber Eats is growing phenomenally. And as a result of Uber Eats dominance and how much they're growing, they decided, why do we need any competition? Why don't we just take Postmates off the table and get the job done? My question remains, why hasn't anyone bought Instacart? And when I mean bought, I mean like bought them out. This is a company that at one point was going to be valued at almost $39 billion. It's been around for the past 10 years. If Uber Eats was able to buy Postmates was also a private company at 1/5 or even about, 1/5 the valuation of where, a little bit more than 1/5, more than 20% of the valuation that Instacart is going public at today, around at $10 billion. It begs the question. Postmates was not as big as Instacart. Instacart's going public at $10 billion. Yes, I know interest rates have changed, things of that nature, but it got taken out in 2020 by Uber Eats. Now, you could argue in 2020 interest rates were low. Maybe Postmates wouldn't get that valuation, sure. But it begs to ask the question, is there something going on around Instacart that we don't know about as retail investors that are going to be left holding this bag? Hopefully this bag will be worth more than $31 a share, worth more than $10 billion. But is there something going on for why Uber, DoorDash, some of these larger, Whole Foods, like why haven't any of these larger chains? If I'm Whole Foods, I buy out Instacart and I integrate it into my suite of operations. If I'm Costco, I take a look at Instacart. But I don't know. It's especially at $10 billion. there's not a company I think that needs to be on the public markets at $100-200 billion. I know it's a tech company, and I know tech companies get tech multiples, but do we really think, especially with their profit margins being incredibly low, the one thing that's saving them is their advertising revenue, because obviously software creates high margin, but paying grocery people. By the way, my mom signed up for Instacart the other day. And so that's a question I want people to think about in the chat. Why haven't they gotten bought out? My mom signed up for Instacart on Sunday. Okay. We get Costco on Sunday. And she thought it was a magical experience seeing the Costco come in. I find out it's a $50 per year subscription. So it's like, okay, you're paying $50 a year for Instacart. So that's pure, margin for Instacart. They get to use that to conduct their operations. Then every Instacart delivery is free. It's a tip-based system. And so you have to pay on tips. And now obviously, if you're a mean person, you're never going to give a tip. But like if someone's really bringing the groceries, you're going to give a tip. So my mom gave a $9 tip. I don't know what the percentage of the thing was, but so Instacart makes money off this like subscription, and then this tip. I don't know if they take some portion of that tip, but at the end of the day, the margins are not that strong outside of the advertising business to generate real alpha in terms of net income. They did about $538 million of profit last year. I don't know if this is the biggest company in the world that we want to look at in a way that is a massive growth opportunity. Let's take a contrarian look at why the IPO will succeed today, which, by the way, I do think the IPO will succeed today. I think it'll be worth more than $31. I think there's enough hype around it. I don't think long-term this is like the best tech company to invest in.
Is this a deal at this price? In your mind, is this a deal at this valuation at this price?
Yeah, and Frank, don't forget, this is not just a grocery delivery company. This has a huge part of their business as ads and software. But, it's a really interesting time for this to go public, because if you think about the grocery business, what's been driving the business, it's been inflation. Most of the growth that we've seen is pricing and pushing through inflation to the consumer, who's incredibly stretched at the moment. And now inflation is coming down. So it's going to be tougher to grow sales. And of course, this is a company that takes a fee off.
This argument was made by Mike Wilson at JP Morgan. So the argument she's making here is that if inflation comes down, prices have to come down, which means gross sales in terms of the actual if you're just looking at pure like revenue that they're making from sales, that has to come down because prices have to come down. And Mike Wilson's argument a month ago was that this is the reason the S&P is going to correct about 10 to 15% in September, October, because he thought inflation would come down dramatically enough to actually impact company earnings because prices would have to come down. Now, I think he's kind of wrong on that because inflation hasn't come down that dramatically. And I guess he has a month left for this argument to be correct by the end of October. But that is something that is going to affect the gross sales that Instacart does.
Off of the price of your basket. So it's an interesting time. And the other thing is, we're certainly hearing from all of the retailers, even Kroger suggested that the business is getting a little more promotional here. So it'll be tough to grow the top line in general in grocery going forward.
Excuse me, Stacey, you're hitting on a really important part. It's advertising business, and also the fact that this is actually a data play. So can you kind of expand on that? A lot of investors are excited about the ad business and the fact that this is what makes it a tech company.
Yeah, so again, it's the ad business and software is about a third here, and we've seen so many companies like Walmart push into that business. Why? Because it's a high margin business as compared to, as you said, grocery that's incredibly thin margins. So
my question today has been, why hasn't Walmart bought them out? Why hasn't Target bought them out? Like Instacart is not a unique idea. I mean, it's been done. Uber Eats, DoorDash, all these guys have done it. DoorDash, by the way, is competing with Instacart for a bunch of different grocery stores. So like the fact that they're choosing to dump shares on the public to give investors liquidity, their VCs, versus have an acquisition, I don't know. It's interesting to see how they're going about this.
That's the real opportunity here. And also for Cart, they're doing other things that have potential, like AI in stores so that you don't have to scan your items. They're doing in-store capabilities. So, there are other plays on this clearly. But again, the base business of grocery is I think, headed for a downturn on the top line here.
All right, so Sarah, you were calling this a canary in the coal mine. We saw ARM have a successful IPO. Shares are down today, but in general, considered successful. Also, Klaviyo, is this riding the wave of those other IPOs, or is this something totally separate? And also important to note, Instacart is profitable.
Yeah, Instacart's profitable, not massively, but there's certainly some profit there. And I think these are all pretty different companies. But the thing that's a little bit different than the last year and a half is they are all tech companies, right? Instacart delivers groceries, but largely it's seen as a tech company. Klaviyo obviously is. The other interesting thing there is that Klaviyo and Instacart, really do have some similarities in that they are both largely in the business of helping you buy things. Klaviyo is a SaaS company, but its biggest customer is Shopify. Shopify owns 11% of its shares. So to some extent, Klaviyo and Instacart are a little bit of that kind of test of the strength of the consumer, because if they're doing well, it means that the consumer is probably in a good place.
Look, I think there's a bull case for Instacart. I think it makes sense, and I think people will do well in the IPO today. I will not be partaking into it. Quite frankly, I don't have a ton of liquidity to buy those shares, but also it's just not, I don't know, at $30, it's not, does it go to 60 today? And if it doesn't go to 60 today, which means a double, you think it'll be 60 in 5 years? If I'm thinking of like a 2 to 3x on a high growth tech company, because that's what you should be thinking, at minimum 2 to 3x on a high growth tech company. So then the question is, how long does it take to get there? I don't know. I mean, maybe it goes to 35 today, 36 today, and you make a little 10, 15%. That's cool. That's not bad. But I don't think it's one of those things that I'm really excited to buy. Now, Ty Gordon makes a good point. If lockdowns happen again, many more people will refuse to follow the mandates, which means more people will need to use a service like Instacart. Yeah, I mean, if we have another once-in-a-lifetime pandemic and it happens and we have lockdowns, then Instacart's going to go through the roof. And by that point, we'll probably print another $17 trillion. And so, a lot of stuff could happen if that's the case. I just don't know, man. I feel like Instacart, literally their logo is a nice shiny carrot. And I feel like a lot of the VCs want liquidity because they're underwater and they need returns for their LPs, which are their limited partners that give them the money to take risks on these high-tech startups in the early stages. And I think the Instacart team deserves liquidity here. But is this really a company you want to be a long-term shareholder in for the next 5 years because you think groceries are going so to the quote-unquote cloud that Instacart's going to benefit from that tech revolution? I mean, look, the numbers look good. We went through the numbers a couple of days ago. The deep dive is great. They're growing at 18% year over year. They're growing at 39% year over year before, but that interest rates is kind of the reason why a lot of that growth slowed down. Growth is still not bad. Profitable company, going to do 2.9 billion by the end of this year, 2.95 billion. So it's not a bad idea. It's just not the most interesting argument to me. Okay, so that was the Instacart stuff. Let's go to the next topic we got to talk about, which is something we haven't talked about on the Market Open for a couple days now, but I think it's time we address it because it's important. We should address it. We're dealing with a government shutdown in the United States of America, potentially happening again. So I wanted to give a little history for those that don't know what a government shutdown is, including myself. I mean, we know what it is, but why does it happen? Under the Anti-Deficiency Act, initially passed in 1884, federal agencies cannot spend or obligate any money without an appropriation from Congress, meaning we can't spend your tax dollars, we meaning the United States government, unless Congress, which is the House of Representatives and the Senate, amalgamate together to be able to give the judicial capability for the government to spend that money. When Congress fails to enact the 12 annual appropriation bills, federal agencies must cease all non-essential functions until Congress acts. This is known as a government shutdown. So we raised the debt ceiling back in, I believe it was May, we came to the understanding of the debt ceiling. And that was a good thing, right? Because now we can spend more money and we don't have to shut down the government. Now we have to do another kind of negotiation on how much money we want to allocate within the United States budget. And this matters for the stock market because the stock market doesn't like uncertainty. And if the government shuts down, which last time, I think we've shut down many times since 2013, but last time I vividly remember a shutdown was the end of 2013 going into January 2014 when Obama was president. And it was 2-3 weeks. And I had a neighbor at the time who was a government employee who didn't go to work. And that's why I explicitly remember it. Let's get a little coverage on why some people are pessimistic on a deal to stop a shutdown from happening.
Measures to avert a government shutdown facing an uphill battle this week. Will they or won't they? House Speaker Kevin McCarthy already warning that stiff resistance within the party means the bill could be dead on arrival. Here with the latest on Capitol Hill, Punchbowl News co-founder Jake Sherman. Jake, handicap it for us. What is the chance that we actually get a government shutdown? What's the chance we avert one?
80% that we're going to get one, I would say, if not more. Listen, the two sides are really dug in. McCarthy has effectively no ability to maneuver here. The big problem is conservatives, Andrew, don't want to pass a short-term government funding bill to allow more time to get things done. They don't want to pass individual spending bills because they say the level is too high, the spending level, even though McCarthy has lowered it significantly. And they don't want to wrap all the individual ones together because they say that that's bad governing. So McCarthy has very little space to maneuver. And remember, I mean, this is a September 30th story. Government shuts down at the end of this month. And then they have to find a way to fund the government for the year. So I am extremely pessimistic. There's going to be some sort of deal that comes together. And to be honest with you, unlike other shutdowns we've seen back in 13 and in 2018, 2019, there is no unifying thing that Republicans want that would get them out of a shutdown. So I'm pretty bearish, to be honest.
That's what I was going to ask. Once you get it, I mean, we're now watching the UAW strike. We're watching the strike out in Hollywood. I'm not saying this is a strike, but sort of. It's a negotiation, and which is to say, how are you going to actually put those two together if, in fact, there's a deal to be had?
Well, the irony is that many of them want border money and border policy and to secure the border. This is Joe Biden's, one of his biggest weaknesses right now is what's going on at the border. If they actually wanted a deal on the border to get out of a shutdown, they could get one. Now, there's only a 5-seat majority in the House of Representatives, and there's a large number of Republicans who want their way or the highway. So to the extent that they could get a border deal, it's not going to be acceptable to them. But in previous times with different kinds of legislators, there would be a border deal available to them, but they can't get out of their own way to get that done.
Now, look, a government shutdown is not going to be a good thing for anybody. Obviously, there's a lot of nuance to different things the Conservative Party wants, different things the Liberal Party wants. Border Patrol is one of those things. I mean, it's pretty obvious in the United States of America that there is a bit of an issue on the border, to the point where I think Texas sent a bunch of undocumented immigrants back to Washington, D.C., near Kamala Harris's house, the vice president, to kind of prove a message to her about how bad the situation was getting. So I think there's a world in which funding will be allocated for that. The question becomes, what are going to be the terms of the negotiations that gets the job done? I mean, that person who just came on the show said 80% chance he thinks there is going to be a government shutdown. That's in 11 days, September 30th. I mean, that's pretty rough. Again, if the United States government shuts down, there is a lot of instability that goes into the stock market. That could be the thing that theoretically triggers September to not be the best month for the stock market. September is actually not that bad, quite frankly. I mean, some stocks have come down, stocks have gone up. S&P 500 right now at 442 in the pre-market. So we got to 450 at one point in September. I think the lows in August were 437, 436. So technically we're up from August. It hasn't been that bad. We're down from July 31st, which was the top at around 459. But a catalyst to trigger something bad happening to the stock market in September? Yeah, the government not having spending bill. Now, on the contrary side, if the government stops spending money, there is a world in which, the stock market interprets it as the government starting to get more serious about their debt, because one of the reasons, or one of the things that people are scared about right now, is that we have $33 trillion in debt. And this goes into a longer discussion of, does the debt matter in the long term and all that stuff. But at the end of the day, our bonds need to be bought. Government debt needs to be bought, and there needs to be enough credibility, legitimacy, and trust in the overall infrastructure of the United States that we will pay back our debt. We are paying $2 billion a day to finance our debt. We're going to spend around $600 billion in interest payments this year on our debt, and the defense budget is $692 billion. I mean, it's a pretty tough situation. It's not easy right now, and that's why I think these government negotiations in the context of the shutdown are not going to be as easy as we need to do this. Doug says Republicans have been fighting with McCarthy now as well. Same with the left. Moderates more like right versus right, left versus yeah. There's a lot. That's a good comment. There's a lot of internal fighting within the party happening itself that's creating even more division, which is why a lot of people across the world are kind of laughing at the United States in terms of how much we fight with each other. Now, granted, we're the best democracy in the world, and democracy requires all this discourse, but there's a lot of internal fighting inside of our own parties to be able to even get to intra-party negotiations to get the job done. It's tough. It is not easy. It is not easy at all. And so I don't know. See, Inbound saying this is news to me. Yeah, I've been learning about the government shutdown over the past couple of days as well. I mean, I've really started getting into it. And by September 30th, the whole country is going to know if there's a government shutdown, because the government might be shut down. All right, let's move on to oil prices. Speaking of things that are going to be bad for the economy, oil right now has topped out this morning at $93.81. And this is not good for the economy. This is definitely not good for inflation. As you can see right here, we're at 93.82. Past 5 days, we're up 3%, 2.5% in the past 5 days. 6 months up 30% on oil. 1 month up 12%. Year date up 19%. Now, if you look at the max chart or just look at the 5-year chart, last time we got to these levels was June. Well, not June. Last time we were at 93. We were at that around October 2022. October 2022 topped out at 97. We got the bottom of the stock market, S&P 500, 340 on October 13th. So market fell to S&P lows of 340 when oil was at 97. Right now, look at that. Oil just went up. There you go, 94.29. We just went from 93 to 94.29. So oil is relatively at the same price as we were last October when we had a pretty bad dip in the market. Now, the top was June 2022, 110. I think people remember June 2022. I was at a ShopRite, which is a local grocery store here in the United States in New Jersey. And I remember just checking Bitcoin that morning. It was like 15,000. That was like the bottom on Bitcoin as well. So that was a really tough day for the markets in 2022. Obviously, oil has cooled down a lot since then, but it's coming back up. And one of the main reasons for this is because of the Saudis. However, the Saudis are saying they're not cutting it because they want to raise prices. They're cutting it for some other reasons.
How much higher will prices go before we start to see some relief? And what else is in play here? Your next guest actually interviewed the Saudi energy minister today up in Calgary and joins us now for that fine Canadian city. Joining us, of course, RBC Capital Markets Managing Director, CNBC contributor Halima Croft. Halima, obviously, we didn't see it on camera. What were the one or two key takeaways with Saudi energy minister Abdulaziz bin Salman?
Well, I think what's so interesting is he said the jury is still out on the outlook for oil this year. And when I asked him, what metrics are they looking at? Because they're going to be assessing this unilateral cut every month. It's officially extending through year end, but he said, we're looking every month. It could go either way. And he said, we're looking at Chinese demand, European growth, central bank action. And so, yes, it's supposed to run through year end, but there could still be a surprise, I would say. So I would say that we're still going to be waiting month to month to see what happens with this unilateral cut.
Did he feel the need to defend? We gave the quote about not jacking up prices, not intended to. Did he feel the need to defend those cuts?
Well, I think the IEA statement, last week, basically criticizing Russia and Saudi Arabia, saying that it's going to cause volatility in prices and huge deficits. I think he felt he needed to go on the record saying that they are not going back to the sort of 80s style policy where they keep cutting and cutting to drive prices higher. I think the interesting question again is, if this is going to be reviewed every month, what are the metrics that they are looking at? And I would also say it's taking place against the backdrop of this effort between the US and Saudi Arabia to craft this grand diplomatic bargain. And he did say that there was an important bilateral meeting between the United States and Saudi Arabia at the G20, which facilitated this memorandum of understanding on the India, Middle East, Europe economic corridor. So forward momentum in those bilateral negotiations.
Nothing is.
Look, I mean, I know the Saudis are saying they're having some grand bipartisan partnership with different countries that they're working with and all this stuff. At the end of the day, I think they want to see oil go up. And they want to make more money off of it. They want to destabilize some of the markets. They hate Biden. I mean, that's just one of those things you can't not take into account. Remember when Biden met with the prince and they did a fist bump? It was the weirdest picture ever, bro. You're supposed to shake his hand, all this stuff, but he was trying to show solidarity because he feels that Saudi Arabia was indeed responsible for the murder of Jamal Khashoggi, which was a journalist in the kingdom. And so Biden to side with free speech and liberal democracies, but also to make sure oil, this is the hypocrisy of, and this is what I'm learning as I get older. It is incredibly difficult to have one worldview that shapes all your values. Because on one hand, you're freedom, democracy, good. On the other hand, the guy that believes the antithesis of freedom and democracy, i.e. people that will kill their own journalists for criticizing them, has all the oil. And if you want the oil to make sure that you get not only elected, but you maintain democracy in the Western hemisphere, because make no mistake about it, if oil prices go to $200, $150, it's not easy to maintain democracy when you don't have a healthy economy that's undergirding the foundation of that democracy so that people have a meaningful, stable life. You need to make friends with the quote unquote guy who believes in the antithesis of what you believe. when it comes to, your philosophical and moral values. And that's the absurdity of existence that exists. But instead of just admitting to that absurdity and that hypocrisy, which I don't think is a bad thing, I think it's the conundrum of being alive as a human being and trying to govern a society of 8 billion people that have different viewpoints. Instead of that, you'll do a fist bump and try to act like it's no big deal. It's really complicated to be able to deal with these types of things, but our leaders don't tend to admit that. They just try to act as if it's not even that big of a deal. Google or Stevie Stone says Google has a 20-minute delay. Oil's at 95.50 right now. So it was at 92 yesterday from when we checked. So it's up $3. That is not a good thing as well. Tesla, Alantir, what time are we starting these live streams these days? We're starting them at 8:45 a.m. 75 minutes, 8:45 until 10 a.m. Now, a couple quick headlines, and then we're going to move on to the next topic. Canada inflation rises more than expected. The annual inflation rate in Canada rose to 4% in August of 2023. This broke 36 minutes ago from 3.3% in the previous month, overshooting market expectations of 3.8%. Let me actually share my screen so you guys can see what I'm looking at here. So Canada's inflation is up. It makes sense why Canada's inflation is up. The United States inflation was up. It's not that bad. I mean, it's up 0.2% from what the market expected. That was basically the same as our CPI. And so, if our CPI is up, Canada's probably going to be up. But this marks the second consecutive acceleration in Canadian consumer prices since hitting the 2-year low of 2.8% in June. And see, this is the part that I'm trying to analyze a lot more as I go deeper into like studying inflation. We hit 3% back in June, and then we ticked up. There's a lot of factors contributing to inflation taking up. Obviously, oil, one of the main ones, shelter, gas prices, rich large, the entire gas index. But this is the issue with the Fed. It's so sticky. You think you're getting a grapple on it, and then it just comes back. And when it comes back, if you don't tighten hard enough to just get that inflationary pressure to go down, you're in a tough situation. The increase was largely attributed in Canada to a rebound in the cost of transportation. So transportation is up 2.3% versus negative 0.8% in July, as the extension of crude oil production, cuts from OPEC nations, and limited capacity North American oil refiners pushed gasoline prices higher. This is similar to our August CPI, 5.3% of over 50% of the basis points of the increase in CPI was because of oil prices. So it seems like it's the same thing affecting Canada as well. The CPI also accelerated for shelter. 6% versus 5.1%, lifted by higher rent costs. That's happening in the United States as well, as soaring interest rates by the BOC disfavored home ownership and saturated the rental market. And the only thing that's going to solve that issue is more supply, which is what we talked about yesterday on the Market Open. That it's kind of funny that Warren Buffett invested in 3 specific stocks that are specifically around housing construction. Maybe a couple months ago, he also saw there is a massive housing imbalance in supply. And in order to curb inflation, you're going to need a ton of inventory to hit the market to solve some of these issues. Ryan says oil prices higher also helps push the agenda of getting electric cars. I mean, yeah, like I don't think it's a conspiracy agenda to push EVs on people by pushing oil. Because look, at the end of the day, even if Biden has like this agenda for EVs, to artificially try to get oil prices to be higher to usher in the era of EVs, it's a lot of pain in the meantime. Like not only for him politically, not only for people, just getting to their day-to-day lives and going to work and stuff like that. It's tough. Especially, it's not good for inflation either. The best thing to get to EVs is for people to have enough money in their pockets and disposable income to transition to buy an EV, not to be losing all their purchasing power because of inflation. So it definitely pushes the agenda of getting electric cars, but it's also not the best thing for the American consumer. On top of that, remember, people seem to forget it costs oil and gas and greenhouse gas emissions to build EVs, not as much as the lifetime of an actual ICE vehicle, but you still need oil to make the EV. It's not like the oil disappears, right? And so that affects everything in regards to production of these cars just as much as it affects actual consumers. Doug says oil being up just attributes to higher inflation, pushing speculation for stocks to fall, not directly related, but is connected. Yeah, 100%. Oil being up means potentially higher inflation. Higher inflation means interest rates longer for a potentially greater amount of time, which means stocks will go down. That's a question of then, do you buy the dip or not? And if you believe inflation is going to come down over time and the companies that you think are high quality, you buy the dip. If you think it's not, if you're a short-term investor, you definitely don't buy the dip because there's probably going to be more pain that tends to go. But oil prices pushing stock downs is mainly a indirect correlation of what it would do to inflation. Couple of reads on the market. S&P right now at 442. We got 15 minutes till the market open. Robinhood, $10.58. Palantir, 1546. ARM is down in the pre-markets 4%, 4.24% to be exact. So it's at $55.54, down from $58 yesterday. Yesterday was down another 4.53%. It is up $4 from the $51 that it IPO'd at. So it's up about 8%, if I did the math correctly in my head, from its IPO price. So those who bought at 64, 65, 63, 67, congratulations. You played yourself, but of course, you wanted to get into the hot IPO. And so you kind of got to live with the bag now. And it is what it is. NVIDIA. Wow. Have you guys looked at NVIDIA? Oh my. I did not see these NVIDIA prices. NVIDIA's at 438. Maybe it was just me yesterday not looking at it, but I haven't seen a 4 and a 3 next to each other on NVIDIA in a pretty long time. I mean, that's wow. NVIDIA. What happened to NVIDIA? What's going on here? 438? I did not see this for a long time. Yeah, there you go. NVIDIA at 438 right now. SoFi also down pretty badly, 867, down from like 915 the past couple days ago. I mean, I expect stocks to be down. It's going to happen. Tesla at 264, down from its highs of around 278 a week ago. But I haven't seen NVIDIA below 440 in a long time. 447, 442 is where I saw it peak out at in terms of it going down. 430, again, psychologically, just seeing that 3 there is really interesting. Palantir at $15.35 in the pre-market. Alex Karp will be speaking at a presentation for healthcare. I tried to get a ticket into the presentation. They were like, hey, it costs $600. I was like, I'm going to end up, I'll catch the summary. I'm not going to pay $600, but he's at some conference speaking about healthcare. Healthcare, obviously one of the biggest verticals of Palantir, so it makes sense that he's there speaking about it right now. Okay, so let's talk about something else. Elon Musk and Twitter. Let's talk about that. So Elon had a really interesting thing he said yesterday. I'm just going to play the clip, let him talk about it, and then I'll give my thoughts on what I think he's saying here. It has to do with what's going on with Twitter, and it particularly was around the business model around how Twitter will solve some of their issues. And shout out to Farzad for putting together this supercut.
An army of fake millions to do this.
Absolutely. This is actually a super tough problem. And it's probably really, I'd say, the single most important reason that we're moving to having a small monthly payment for a use of the X system is it's the only way I can think of to combat vast armies of bots, because a bot costs a fraction of a penny, call it a tenth of a penny. But if somebody even has to pay, a few dollars or something, some minor amount, the effective cost of bots is very high. And then you also have to get a new payment method every time you have a new bot. So that actually, the constraint of how many different credit cards you can find, even on the dark web or whatever, and then so prioritizing posts that are written by basically X premium subscribers. And we're actually going to come out with a lower tier pricing. So we want it to be just a small amount of money. This is and it's a longer discussion, but in my view, this is actually the only defense against vast armies of bots. Because as the AI gets very
Okay, so he goes on to say, as the AI gets stronger, it's easier to make fake accounts because the AI can get through all the tests that people have to be able to make these fake accounts. I don't think this idea makes the most amount of sense and I don't think it'll make any sense for Twitter because look, and we'll talk about Rockletlabs right after I get on this topic. Look, if you're charging a small amount of money per month to use the platform, the question becomes how much money can you charge at the least possible amount to be able to cover the cost for Twitter? So like, what is the least amount of pennies or cents or dollars that MasterCard, Visa, etc. will accept from Twitter users without having Twitter to cover up a margin because they have to pay for the cost of like contracting the business, like Stripe fees, examples like that. So the question then becomes, what is Twitter going to charge? Now, if Twitter wants to charge $1 a month or $2 a month or something, they would be making some decent margin off of that, right? Because $1, $2 a month, that's probably higher than some of their non-engaged users or lightly engaged users in terms of their ARPU, average revenue per user from the advertising. I mean, I would bet $2 a month is probably better than some of their users. They have 550 million users that barely use Twitter or use it once a month or something like that. So $2 a month, guaranteed, not having to show you any ads or rely on the ads, that's definitely beneficial. Elon's talking about a small amount of money where, are you talking about 5 cents a month? You're talking about 50 cents for the year? And if you're charging someone 50 cents for the year, if your goal is to combat bots, if I'm building a bot army, like, yes, the like making 100 accounts for free is awesome, but making 100 accounts for 50 cents an account. Like if I'm building a sophisticated bot army, I'll just make 100 accounts for 50 cents an account, right? Like the trade-off of spending 50 cents, 70 cents, 5 cents, 10 cents for these manipulators on the platform, they'll gladly spend that money because they're going to make that money back later, right? Like right now they're getting away with it for free. That's cool. But unless you're raising it to such a significant amount where every user would have to pay $8, $10 a month, $100 a year, $50 a year, something like that. Now you get into the point where if you're trying to make 1,000 bots, $50 a year, 50,000, it's not the easiest thing to pay. So I think if he's trying to combat the bot problem, I think Twitter just has to get better at their AI, being able to solve the bot problem. I mean, you can't tell me we're going to solve FSD, but we can't solve bots. And in fact, by the way, to Elon's point was when he bought Twitter, like, how are we solving self-driving cars at Tesla, but we can't solve bots on Twitter? So the idea that you have to charge people just to be able to solve the bot problem, I think that is incorrect. I think that's more so Twitter's declining advertising revenue, which is down 60% year to date because they've chosen free speech over what the establishment wants, which I'm a vast supporter of. I happily pay my Twitter premium to try to support the cause, but I don't think charging people to be able to solve the advertising problem is going to be as easy if you make it a small cost, because then everyone will just pay the cost. So it doesn't make a lot of sense there. Joshua says, just make it so you have to validate the account with a valid ID. This is also possible. The problem is the beauty of Twitter is a lot of people making these anonymous accounts and just tweeting. Remember, at the end of the day, Twitter wants tweets. Elon said we get about 100 to 200 million posts a day. They want to get to like 1 billion posts a day, right? They want Twitter to be, I think Facebook probably gets way more than 102 million posts a day, right? Like, because Facebook's just at a different scale. For them to exceed this $44 billion valuation, they need high levels of consumer retention on the posts, which means they need a lot of posts and a lot of diversity of posts. And you need different accounts to be able to create that stuff. So for example, I have a Twitter account called Daily Palantir. I have my own Twitter account, and it is investing. My Twitter account would be validated by my driver's license. What would validate the Palantir Daily account, right? Like, am I allowed to have 2 accounts underneath one government ID? And then what's the process to be able to figure? Like, it gets a little complicated when you do that. And on top of that, not to mention, if you make people sign up with an ID and you make people pay, people are just not going to sign up, bro. People, like, I tried to sign up to Fubo TV the other day, and they had all these ridiculous like questions, and I was just like, fuck it, bro, I don't care. I just left. And so it's really hard to get consumers to sign up for something. You want to make the sign up flow as easy as possible. Advertisers care about user count. If you're monetizing users and you don't care about advertisers, then you have to bet that millions, hundreds of millions of people will pay $5, $6, $7, $8 a month, and that will cover the ARPU that an advertiser will get you. I don't know if people care that much about Twitter. I love Twitter. I know a lot of you people in the chat love Twitter. We'll transition to Rockletlabs in a second. And I know a lot of people in the financial markets love Twitter. But the problem is the whole world doesn't love Twitter. I mean, at the end of the day, Twitter is a very small bubble of, you could call them intellectual people. And what I mean intellectual, I don't mean smart. I mean people that are chatty, right? They're willing to like spew out their ideas. Like, I met with that real estate guy on Sunday. It was a nice little experience. He taught me a lot about real estate. I actually had the energy to come up with 7 sentences to put that into a tweet and put that onto the platform. There's not many people like that actually care that much. That's why Instagram is easier, because you can just mindlessly scroll through photos, or same thing with TikTok. Twitter's always been that unique niche product, but it is the de facto town square for journalists, academics, knowledge workers, some of the most important people, government officials on the planet. But it's just not the best business model. So charging people for that, I don't think is the wrong idea. I just don't know how many people are going to be able to pay for that at the end of the day. Okay, Rockletlabs. Let's go to this one and transition here. Rockletlabs is down a significant amount. Rockletlabs right now down 17% in the pre-markets. Why is this happening to Rockletlabs? Well, the rockets did not launch. And we have Alex saying, I will never pay for it. Yep, you got people like Alex that are just never going to pay for Twitter. So Rockletlabs drops 20% off them not being able to launch a couple rockets. A lot of people were telling me about this stock, saying, Amit, you got to start a position. You got to start a position. Well, maybe now that it's down 20%, maybe there's something to look at for this. But look, my pushback against people when they said that was, A, I'm just not that interested. B, it's a rocket company. Rockets don't always go up. Like, if they fail on a launch, the stock's going down. It's literally that simple. And so that was my very elementary reason for not buying Rockletlabs. I thought the growth prospects looked really interesting. Financials were whatever, but you would buy it for the growth stock. You wouldn't buy it because of the financials. My hesitation was always, things go up, things go down, and sometimes they don't go up. And so that's the kind of hard part about this. Rockletlabs stock fell in the pre-market trading after the company suffered its first launch failure in over 2 years. And that's what gave shareholders confidence that they're not going to have that many failures, because it's been 2 years since they had a failure. But, putting rockets in space is hard. Its uncrewed 41st Electron rocket launch failed about 2 minutes and 30 seconds after lifting off from New Zealand. The rocket was carrying the Acadia 2 satellite for San Francisco-based Capella Space. There you go. That's why it's down. That's why it's down right now. Rocket Lab, in its second quarter report, Rocket Lab forecasts about $30 million of launch services revenue, the minority of its overall forecast revenue between $73 million and $77 million, as the bulk was expected to come from its space systems unit. Now, SpaceX has failed at rocket launches before. Obviously, SpaceX is getting to a point where rocket launches and the failures are minimal, even though they may still happen. But Rocket Labs might not be at that level of sophistication when it comes to where SpaceX is right now. Rocket Labs at $4.24, down 15%. Do you think it tanks below $4 in the market open in the next 4 minutes? I think it's possible. Either what we're going to see is the dip get bought for a 15% dip, which could happen, right? People might be super excited that this finally dipped, or it might continue to sell off. Instacart will be going public underneath the ticker symbol CART in about 3 hours, 12 p.m. That's when we're going to see Instacart go public. And then we'll see how that one happens from there as well. Torben, thank you for being here. Hi. Hello. Thank you to 420 people. There we go. 420 on the dot. Thank you for being here with me on the market open. In about 4 minutes, we will see what happens in the market. Also, Disney news. Yes, I was going to get to this after the market open, but let's talk about it here for a little bit. Disney has put out today that they're investing $10 billion in their parks. I believe they came on CNBC to talk about it a little bit today, down 1.74% in the pre-markets. I think this is a good move by Disney. And the reason I think this is a good move by Disney is because I wouldn't say bearish, but I'm not excited about Disney content. I've been pretty public about that. I know Chris, our fellow finance junkie, he's really excited about Disney Plus and their content aspirations. And look, he'll probably be right that the stock will go back into the hundreds or whatever because it's a recovery play. But I'm not that bullish for the content side of Disney. I mean, I really don't see the Disney Plus thing becoming amazing. Hulu and ESPN are parts to the overall problem they have to solve. But honestly, I think if Disney doesn't become a Netflix type of studio where they can create hit after hit after hit, because that's not in their DNA. Their DNA is to make Snow White and Frozen, and even that they're kind of sucking at, quite frankly, to be honest. I don't know if Disney Plus is your content play to go for. So if that's the case, the parks are the next best bet. I mean, the parks print money for Disney, and they do really well now that we're not in a pandemic and people want to actually go to these parks. So I think it makes sense that a lot of people are they're beginning to start investing more heavily in there. And it's quite needed because they probably need to renovate and redo a lot of the parks that they haven't done for the past 10 years. Koss, why not? Hello, Amit. Thank you, Koss, for being here. We got about 2 minutes until the market open, and we're going to see what happens. S&P 500 right now at 443 or 442 in the pre-markets. Again, my major point has been that the S&P has held up very well in a pretty bad month for stocks historically. We've got 11 days left. We've got government shutdowns. United Auto Workers strike. I didn't talk about them too much in the market open. No major updates outside of the fact that they're still not coming to the table for negotiations. They're actually starting new strikes in different locations today. So same old story. Eventually, they're going to have to figure that situation out. But there are United Auto Workers strike, government shutdown, and then oil prices hitting above $95. Those are the three biggest catalysts I see right now that could lead to September and potentially even October not being the best month for stocks. Now, you got IPOs and tech companies coming out like ARM and Instacart, and there's another one that we talked about yesterday called Klaviyo that wants to go public, that are bringing more liquidity into the market. The problem is the 5.5 trillion, and I'm going to try to get an update if that 5.5 trillion has gotten higher. That's on the side in money market funds, getting a cool 5% for doing nothing. They don't want to come out and play. And if they don't want to come out and play, it's going to be hard to have even further liquidity enter the market to actually get asset prices to go up. And on top of that, you got 10 years and 2 years giving you 5% and 4.9% respectively, which means that that's also just tough to compete with when it comes to stocks. 10 year today at 4.34%, and the 2 year today is at 5.086%, both green for the day. So those are the impending headwinds that we have right now for the stock market. All right, here we go. 462 people, September 19th, 2023, 9:30 a.m. No matter what happens in life, you will always remember, hopefully, that you were here for the market open. The stock market is now open. Wake your ass up. Here we go. ARM is down 3.4%, $56 as we open up the market. Rockletlabs down 13%. So not down 18% as it was in the pre-market. The dip is getting bought. You can see there's a nice little green candle right there. A nice little thick and big green candle right there. So 4.4 down 12%. Dip is getting eaten up a little bit by public shareholder market investors. 84.02 on Disney. Nvidia 439. S&P 500 442 down 0.21%. PayPal. This stock was at $65. It's at $61.94, down 1.8%. They put out some news about their stablecoin that we'll get to in a little bit. That really didn't move the stock too much, but PayPal down about $4 from the $65 range. ARM Holdings again, 56. General Motors is up somehow because I guess the worker strike doesn't matter. 0.27% green. Tesla is down 0.35% at 264. Ford, also another legacy automotive company, up today, 1236.16%. Roblox at 27.7. Arc Innovation 41.64. Palantir $15.32 opens down 0.87%. Volume approaching 979,000 shares traded within the first 28 seconds of the market being open. Google $138 again. Google close to its all-time, or not all-time, but 52-week highs. Robinhood 1057. Airbnb 141. AMC at 761. Starbucks 95. Nasdaq 13,641. So we're definitely getting a little bit lower on the Nasdaq, opening up 76 or 67 points lower on the market open. SLG at $40. DNA $1.80. Apple 177. Again, reports came out yesterday from a variety of different research kind of conglomerates that compile all this data. iPhone 15 Pro demand is up, and in particular, iPhone 15 Pro Max, the one they're charging $100 for extra, is also up 10 to 12% of expectation. So the iPhone is selling pretty well. There's about 6 weeks of a wait time for pre-orders. So 15 selling like hotcakes. I mean, Apple, they proved to the market that titanium sells, and so people are buying titanium, including myself. I upgraded my phone and my entire family. So Apple might end up surprising in Q3 if they show some decent orders for that iPhone 15. SoFi at $8.73, Alibaba $85, Neo $9.30, Fubo $2.27, Roku $73, Dutch Bros $25, Intel $37, Path $17, and TFC at $28.77. Celsius falling below $200 now at $198, and Bitcoin 27,163. Gas goes up, so Bitcoin goes up 27,454. It's beating the 25,000 lows that it was at just 1 week ago. And again, Palantir at $15.33. Not a horrible open. The screen, let me just fix the camera. Not a horrible open, but not also the worst open, given where we got a little bit of red and a little bit of green. Let's move to something I wanted to cover a second ago, which is Cathie Wood talking a bit about Tesla and self-driving. Now, the reason why this is really important is because Elon Musk shared the FSD-12 beta a couple weeks ago, and it really looked phenomenal in terms of it being purely AI-driven. The other reason this is important is because if this United Auto Worker strike continues, there might be a lot of demand for Tesla to be able to take over different parts of the market. God forbid there's an entire bankruptcy into some of these legacy auto companies. So I think the market opportunity for Tesla to get self-driving taxis into the market and make it actually happen, since they've been promising it since 2014, is now. Let's get a look at what ARK and Cathie Wood has to say about this.
Tesla is her #1 holding in the ARK Innovation ETF. Cathie, great to have you with us here on Fast.
Oh, I'm happy to be with you, Melissa. Thank you for inviting me.
The traders and I were talking here on the desk about Tesla and how your bear case for Tesla is $1,400 a share. Guy here said he'd take $1,400 because that's still pretty bullish. What is in, let's just even say, the bear case? What assumptions are made about its business to get to that $1,400 by 27 number?
Well, about a third of our valuation is associated with electric vehicles, EVs, and scaling them. And as you mentioned, Turkey, a plant there, many countries do want a Tesla plant because this is the new world, right? So that's good. This is all working out. And then 2/3 of our valuation is around autonomous and autonomous taxi platforms. We think Tesla is in the pole position here in the United States. It has collected more data about our roads and actually other roads around the world than all of the other companies combined. And therefore, it has more corner cases and probably will be the company that will get people from point A to point B as quickly and safely as possible. So it's a winner take most market.
All All right, so Kathy not saying anything that interesting we didn't know. I thought she was going to shed a little bit more insight into what's going on with FSD and what they're working on. Look, my position on FSD has been pretty clear for the past couple of months. I think it's very possible for FSD to happen. It doesn't seem like it's happening anytime soon, given regulatory stuff and Elon just getting the tech right. But my biggest thing has always been, I'm never getting in a car that's been driven by someone else, or at least I'm going to wait 5 years until there's enough data to know that me being in a car that is run by itself is perfectly safe for me. And I challenge anyone in the chat to say, would they let their mom or their daughter get into a self-driving car and let it drive around for 30 minutes? I think a lot of people would say no. And as a result of that, FSD is a major bull case, but the valuation baking it into the stock right now, pulling forward that revenue for that potentially happening, it's hard to imagine that. What I am more bullish on Tesla right now is that if the United Auto Workers strike continues, the transition to EVs for GM, Ford, and Stellantis will just be delayed even more than it wants to be. Ford wants to get their first plant done by 2025. They're investing $6 billion, GM by 2026. Like, a lot of this stuff is not going to happen if this auto worker strike continues to happen. And until there's a settlement reached, it's also going to be pretty tough. So I don't think it's going to happen anytime soon, but we're going to see eventually when it does happen. Enphase is up 5% up right now in the market. Enphase, TJ Rogers, this is some good news on Enphase, bought 32,600 shares yesterday of Enphase. So he bought about 4 million shares of Enphase. That's why we see Enphase going up today about 5%. I think TJ Rogers needed to buy Enphase. It was getting to a point where the company was, people were thinking, is this a $100 stock? Is this going even further below? If interest rates go even higher, obviously it's not going to be good for solar adoption. So a lot of people were asking the question over the past couple of weeks now, is Enphase a buy? A lot of the bulls argued, of course it's a buy. It's trading at 20 times or 24 times PE, whatever the metric is. It's some ridiculously undervalued price to earnings for next year's earnings. And as a result of that, given the growth, given where solar adoption is, this is a no-brainer. People were saying at 190, 180, at 240, this is a no-brainer. Now it's like a deal of lifetime. The bears are saying if interest rates continue to go higher, inflation continues to go higher, no one's going to give a shit about financing their home for solar because people are just busy at the end of the day. They don't care about this type of stuff. TJ Rogers buying Enphase yesterday was a sign to the market that at least the CEO feels, or sorry, not the CEO, the founder of the company, the guy on the board, feels that 123 is a bargain. Now, the question becomes, are they going to implement the buyback that they issued at $159 for $1 billion into the price at 123? It's one thing for the individual person to put their, $4 million into Enphase. It's another thing for the company to say, at this price, we think we're undervalued. So I think it's a good sign by TJ Rogers for buying 32,000 shares of Enphase. Until we see some buybacks, and we would see a big print in the volume if there's an actual buyback. We won't know for sure until earnings. Maybe the company feels that 123 is still expensive, and that's why they're not going to allocate that $1 billion yet. Because if every bull is telling me it's the cheapest thing in the world, by the way, I have some Enphase shares at around this price, a little bit lower than this price. Enphase should kind of buy back some of their stock. You don't have to spend all $1 billion, spend $100 million, right? At 123 if you think it's a deal. Maybe they don't think it's a deal yet. Maybe they don't. And so we'll end up seeing what they feel like it's a deal, if that's going to happen. Jason Reynolds says, if you don't put your mom or daughter in a Tesla, you're putting them in something that's less than the safest option, crash test proven. I don't know if that's the case. I think an Uber driver that has done 500 trips with a 4.9 star rating is going to be a lot safer than the early versions of an FSD car. And look, if you disagree with me, then you put your mom or daughter or wife in an FSD car as soon as Elon rolls it out. And you can be what I like to call the guinea pig for FSD. And you can have a grand old time sending them off to wherever you want to send them in that self-driving car and hoping nothing goes wrong. I will take my chances with the Uber driver that has 5 stars and has done 1,000 trips. Like, that to me is just a little bit more safer. 5 years from now, if we get some more data on Tesla, then I'll take that option. But that's been my everyone loves FSD. And I'm like, no one's going to use this as much as they think they're going to use this. And if there's rapid adoption acceleration, that's great. I won't be part of that rapid adoption acceleration. I'll let it happen. I'll let the guinea pigs, a lot of them potentially get in car accidents and do what they need to do. I'll keep my life safe. And then I'll decide to go do that. But I think a lot of people in general, are just not going to do it. And the Tesla bulls have to accept that. I think that, and I've asked all the Tesla bulls I have a podcast with called The Finest Junkies, would you let your wife or daughter do that? All of them said no. And they're the biggest Tesla bulls I know. So it's something that is important. Amit, he means the safety of the car, not the FSD. That's fine. Sure, the safety of the car is fine. But at the end of the day, I don't know. Do people really buy a Tesla because it's the safest car or because they want something that drives itself and it's an EV? Like, you're not picking a Tesla over another car that costs as much money because it's safer. In my opinion, you're picking it for 2 reasons. It's an EV and it has FSD. It has technology. Like, yeah, safety matters, but at the end of the day, you can get into a car crash anytime, right? Like, car crashes are car crashes. If FSD doesn't create more safety or significantly more safety, it's not going to be the most interesting thing for me as well. Although I disagree with you. I think you're looking for, I'm not going to be the crash test dummy. Yes. Look, let me know in the chat, who wants to be the crash test dummy? Let me know. Because everyone wants to be the Tesla bull on FSD, which is different from the stock. We're talking about FSD. But then when I ask, so are you going to be the crash test for FSD when it rolls out in your location? And you're going to trust the robot? I think very few people want to decide to be that dummy. All right, let's get an update on the Fed. We have the FOMC meeting yesterday. I will be live streaming it. FOMC meeting tomorrow. I will be live streaming it. We are going to get to know if the Fed is pausing or raising rates. Let's see what the former Dallas Fed president has to say about where we are in the fight against inflation.
I said it's like a Rorschach trying to follow the Fed. People see different things. We had a economist who's really smart and really good on earlier, Kelsey Barrow, said inflation's been coming down faster than the Fed thinks. Right. That's going to continue. Oil prices up where they are can be deflationary because it causes people to realize, oh my God, I just filled my tank. I don't have anything left over. Shelter's coming down. We've gone from 300,000 jobs a month to 150,000. Last rate hike is in, it's done, and they will cut probably next year. You probably don't agree with any of that, do you?
No, I mean, it's a reasonable scenario. I'm just not sure it's very likely.
Well, what does she see? What do you see that makes you think differently?
We have a lot of still enormous fiscal stimulus in the economy. That's a plus and a minus. The minus is it runs up the carrying cost. You know, Joe, the last 11 months, we've been incurring $644 billion in debt payments, interest payments. Defense budget, $692 billion. This is growing. We have $33 trillion in federal debt now. So why don't you, simple math, if you say the average cost to carry is going to be 5% between the short and the 10-year, you can do the math. That's a lot of interest being carried. So the stimulus comes from that. The problem is, and it's inflationary in many ways, pumps up the economy, but we're spending a fortune on interest, $2 billion a day on interest. The good thing is we're in better shape than everybody else. So money's still coming into the United States. If you look at the DXY, which is heavily euro-oriented, still a strong dollar. So there's some very attractive things about what we are doing, even though we're running up these huge deficits. We have an irresponsible fiscal policy, Congress that is dysfunctional, et cetera, et cetera. We're still the best place to be. Of course, within the United States, Texas is the best place to be, but we won't talk about that.
People in Texas are very proud to be in Texas.
Animus directed at teachers' unions, and why are our kids?
Okay, then they're going to talk about the teachers' union. So what he was saying there was really important to understand, that the reason the Fed is likely going to keep rates steady is because we're paying $2 billion a day when it comes to our debt. Paying $2 billion a day when it comes to our debt is pretty tough, almost more than $600 billion a year. The Fed does not have enough conclusive information to be able to say we're going to raise rates another 25 basis points. Likely in the November meeting, once they have more conclusive data after 2 more CPI reports, they'll be able to make that decision. But for now, CPI going up, PPI going up, and us knowing that a lot of that stuff is lagging indicators for why it's going up is not a conclusive enough of a reason for the Fed to decide that they're going to raise rates. So tomorrow, what I'm expecting, and what the former Fed Dallas, the chairman of the Fed in Dallas in Texas is also expecting, is that because the United States is at a place where we are paying so much in debt, but for some reason there is still more money coming into the United States in terms of investments, companies starting, general liquidity, people that want to build in the United States, that is keeping us afloat, even though we have, $33 trillion of debt and 2 billion more added to that every single day. That even if that's the case, the United States is still in the best place to be. If the Fed were to significantly accelerate adoption of higher rates because they think inflation is sticky at this stage, there is a world in which they can absolutely crack the economy. And so the likelihood is that's not going to happen. But if it does happen tomorrow, we'll find out. It just won't be the best thing in the world if that does end up happening. But we will see where it goes from there. Smitty says, who does the Fed actually answer to? Serious question. Are they completely anonymous? So theoretically, yes, the Fed is supposed to be an autonomous agency that is apolitical. They don't work with Democrat administrations or Republican administrations. They report to the president of the United States, but oftentimes the president of the United States and the Fed are contentious with each other. In fact, Donald Trump gave an interview yesterday with MSNBC, and he said, kind of read between the lines, that he would basically get rid of Jay Powell, right? Like he's not the biggest fan of Jerome Powell, given interest rates are high. Now, Donald Trump also, given his business acumen, understands stuff about inflation. So he says, look, I would still not put pressure on the Fed to reduce rates, which would be good for the economy, but not good for inflation if inflation was high. So he understands the importance of a Fed that's tight on inflation. But the reason everyone's mad at the Fed, because every single decade, it seems like they miss a trend. And it's like, I'm living my life. You guys are living your life in the chat. We don't have time to worry about macroeconomic stimulus policy, all this stuff, like the grand minutia of it. The Fed does have the time. They have like 10 hours a day to just stare at those numbers and figure this stuff out. The fact that in 2021, they could not figure out, when inflation was heading above 2%, that it was not just transitory, but that it was a real thing after we had printed more than $7 trillion and done quantitative easing out the wazoo and interest rates were, at zero. The fact that they couldn't figure out that maybe this is a bit inflationary, it was appalling. And that's why it lost a lot of its credibility at the end of the day for doing it. Johnny says, hey, Amit, I have another friend whose birthday is today. Johnny, I love you, but I can't give your friend a shout out, because if you were on the market open yesterday, you saw what happened when I gave Johnny's friends these enormous shout outs. Let's just say that. And so I'm not giving them a shout out today. All right. What else do we have kind of going on in the market? So we talked about oil. We talked about Instacart. That'll be going public in a couple of hours. Government shutdown. We talked about that. We talked about Elon Musk's new Twitter. Obviously, Rockletlabs being down 20%. Let's get an update actually on some of these charts and see where we have things going on in the markets. And then we'll keep going from there. Enphase up now 4%. It was up 5% at one point, 122. Again, I think this is a TJ Rogers pump, but nothing super fundamental, but still nice to see it up on a day where it's been, a week where it's been pretty red so far. NVIDIA, look at that, 435. I haven't seen 435 in a long time on NVIDIA. I'm about to check the chart right now on my phone to get a better look at this, but I haven't seen NVIDIA down here in a minute. Last time NVIDIA was at this price, 435, we were at, what is it? We were at 435. It was around August 15th, about a month ago. So a month before their monster earnings, where they grew 100% month over month, year over year, NVIDIA was at 435. So it's back to August lows, even after that earnings. PayPal up a little bit at 62, ARM at 55, now down 4% on the day. If you bought in at 51, you're up on the IPO. If not, you are holding a bag. Tesla at 264, down 0.28%. Roblox 2711, Arc Innovation 4158, Palantir 1522. So Palantir down 1.5% on the day. You look at the stocks that are not down. Google, it's red, but barely, at 138. I think the market's starting to see that Google has a moat in AI that really can't be denied. And as a result of that, is giving them a hefty premium. We talked about Bill Ackman yesterday loading up a crap ton of Google for Pershing Square. So now 4.5% of his portfolio. Makes a lot of sense why Google is there. On top of that, let's see where Amazon is at. I think Amazon hit 142 the other day. Amazon 137. So still Amazon close to that 140 level as well. Big tech is maintaining some of its momentum. Meta is at 300, 303. Look at that. Meta's green. I think Meta's earnings are gonna kill it. I think Meta's gonna do really well. They're still gonna lose money on Reality Labs, but they're gonna print advertising revenue. Advertising hasn't slowed down. They're gonna have to go to Meta. They're probably gonna print another $33 billion per the quarter, 8% year-over-year growth. Instagram Reels adoption is ridiculous. Meta's just at this point where they got 173 million people to download WhatsApp, Threads, WhatsApp for Business, Messenger, Instagram, and Facebook. There are 6 apps in the month of August. 173 million in that time. It's pretty insane. It's pretty insane at that level for them to be able to do that. Palantir just dumped. Yes, Palantir dumped as well. KQ says Google has no moats. I would disagree. I think Google has a substantial advertising moat, and their AI capabilities are looking like they are going to be a major AI player over the next decade. Let's take a look at Microsoft. We haven't checked Microsoft in a bit. 327 on Microsoft, down 4.43%. Microsoft hit 369 on its highs, 313 at the low. So 327, nice little spot in the middle that it's at right now. Microsoft, a $2.43 trillion company. Apple's market cap is around 2.79 trillion. And Google is at 1.75 trillion. So Google being the cheapest out of all of them, well, Meta being truly the cheapest, because Meta not truly the cheapest, but in terms of market cap, it's the smallest at 778 billion. That doesn't mean there's more alpha in Meta, because I think Meta trades at a little bit higher of a PE than Google. But that does mean that it's the smallest in terms of market cap. All right, there's we go. There's what we're seeing in terms of what's going on in the markets. Again, for those that missed it, Canada inflation rate rose to 4% in August of 2023. So Canada's CPI, the equivalent of the US CPI, came out today, and Canada is up, which means inflation is going up more so across the world. The Central Bank of Europe last Thursday raised interest rates a quarter, 25 basis points. No one expected them to be able to do that. The reason they did that is because UK's inflation is in like a really tough situation right now. And as a result of that, they ended up taking some steps to being able to try to resolve different parts of that. Let's get one final piece of look of coverage on Elon Musk moving to a monthly fee to combat bots. So we talked about that a little bit earlier. I would like to know you in the chat what you think of this as an idea. I don't think it makes the most sense in the world, but let's hear on why this might work.
Moving to subscription fees. In a live-streamed interview with the Israeli Prime Minister Benjamin Netanyahu, Musk said that the social network is moving to having a small monthly payment for use of the X system in order to try and combat vast armies of bots. Musk didn't say how much a new plan would cost users. He also divulged some new metrics for X, saying that it now has 550 million monthly users who generate 100 to 200 million posts a day. Getting rid of bots is one thing. You can imagine that trying to turn a profit is another point in trying to do this. It was first with check marks.
What's the number a month?
Well, what is it?
You mean what you're gonna have to charge a month?
What do you think? And then I want to ask you about how much Katy Perry sold her catalog for, because they don't put that either. What do you think it was worth?
$2. Oh, no,
Katy Perry.
No, on the money piece, it's almost just like any money would do it.
I know, but that might be enough for me to not do it.
And then the question is, would you pay 50 cents? Would you pay? Here's the issue. And he said
50 cents it won't be, though. Don't you think it'll be $5?
I think it'll be $2.
No.
$2?
Yeah.
I think the issue is, he said yesterday, which is if AI can just start an account, right? Literally start an account. And, now we play with all these ridiculous games with CAPTCHA where it says, show me, the horse upside down or this, and you have to
show me where the cars are.
The AI can do that.
By the way, that's the most annoying thing on planet Earth. They could figure out a better way to verify I'm a human. That would be greatly appreciated.
It's not.
I flunked some of those
You
tests.
flunked some of those.
I flunked some of those.
The AI can
find
do
the
that.
traffic light. It's
right.
Like,
the AI can do that as well as we can do it, if not better than we can do it. So once that actually is true, if it's not already true, what could you possibly do except start charging people money and making it actually expensive to do?
Maybe I'll do it then. But
that's why I think it's
$2.
But you think that's why it is? You think it's the bots, or you think it's that the advertisers aren't there?
It's $15
in the past.
No, I think the advertising is a whole other component part.
We need to find a way to make this profitable.
Yes, but I don't think it has anything to do with the bot issue and the advertising issue. I don't think are in the same conversation.
So do you think the charge, if it's a fee for everybody, would be as little as 50 cents? Or is this something that's going to be $2.99, $5?
I think it's
because if it's really just
I don't think it's an effort for a profit. I think that the question is, what is it? I mean, you know what the answer is? The answer is whatever American Express, MasterCard, and Visa. What is the lowest number that you can charge without it actually costing you something? So there's a minimum
cost. But
cost.
you do it for a year. Like if you say it's going to be $5 for the year.
Right.
And that's it. But we're not going to charge you a high monthly fee or any of those things.
That's what I'm saying.
Again, I don't know how much this makes sense, because if it's a small fee, then bot armies will still exist. If it's a middle of the road fee, then users are not going to come. So this is a double bind. Either you charge $2-3 a month, which the vast majority of people will not pay that much money. They're just not going to pay that, right? They're just going to be like, all right, I don't need Twitter in my life. They're going to move on. Or you charge such a small fee, 10, 15 cents, whatever, where maybe people are willing to pay. They still have to put in their credit card information, which is annoying. But then if that's the case, the bot armies will still happen, because all the bots you'll pay 10 cents for a bot, right? You don't care if it's 10 cents for a bot. So I think it's a tough situation for Elon to put that out there. I think the best way to solve this is just to grow advertising revenue, grow premium subscribers. The problem is they have to make Twitter a destination where hundreds of millions, if not billions of people want to be. Remember, Meta got 173 million new installs last month on their family of devices in 1 month. Twitter is struggling to have more than 500 million users, right? And as a result of that, Meta at 3 billion, it's just a tougher product at the end of the day. It's more of a product problem versus anything else in order to get people to still be able to use the product. There is a way to fix this with CAPTCHA rather than have them pay. Well, yeah, Elon's point is the AI is getting too significant to solve CAPTCHA, but I mean, that's the other way to solve this. Just make the AI better. Don't let the AI, don't let Twitter's AI fall prey to the scammers AI when trying to get through CAPTCHA. Just figure out a way to solve the problem. And speaking of figuring out a way to solve the problem, what Elon really needs to do and what Twitter needs to do is pontificate, which is the word of the day. Pontificate. You guys have probably heard this word before. For those that don't know, I think it's a pretty common word. Pontificate means to speak or express an opinion or something. It really means to think about an idea and then pontificate those thoughts out into the world. So I think Elon and Twitter, they need to use this word of the day and they need to figure out what is the best solution we have. How can we pontificate a way to maximize advertising revenue, minimize unregretted user minutes, be able to make sure that we have less bots and use our AI in an effective way to recommend the best content to people without having bots popping up all over the time on Twitter. Now, bots are significantly down from where it was a year ago. I'll say that. Bots are significantly down from where it was a year ago, but still it is good. Palantir Research, shout out to him. Definitely check out his channel if you're interested in Palantir content. He says, that's a word you'd see in the Bible. That is true. You would see probably that word in the Bible. The first version of Rambo was always pontificating. Yep. Pretty much. I've used that word for a long time. I found out about the word like 10 years ago. And I was like, I'm always using that word now. All right. That's it for me, everybody. I'll have a new video coming out later today on Bank of America's newest report on Palantir. And I'll be discussing a little bit more about what they thought about AIPCon. We'll have Finance Junkies at 7 p.m. As always, we had a big discussion yesterday about the United Auto Worker strike. So if you want to check out the episode from yesterday and go into that, we'll keep going from there. And today we'll probably follow up that discussion and talk about some more things. And that's pretty much it. Tuesday. Oh, before everyone leaves, let me show you one video that I posted on Twitter this morning, if you'd like to see. This is how I got my morning started. And I haven't been able to do 5 in a row in a while, but I got to somehow do 5 in a row. And so I was like, you know what? I'm posting it on Twitter. We're doing it. This is me early, waking up in the morning at 5 a.m. Boom. See that nice little gym music in the back? That's 2. We got 3. 4, give me one more. This one hurt. And 5. I wanted to do 10, and then I sat there for a second. I was like, no, I can't do 10. Let's get it. Tuesday. Have a great day. Have a great week. I'll see you a little bit later today. Thank you all for joining, and we'll see you tomorrow on another Market Open. Bye, everyone. Have a great day.